Top 10 stocks to invest for long term. So before we get started, make sure to hit that like button and subscribe to my channel. 1. Johnson & Johnson. Johnson & Johnson is a massive, diversified healthcare company that was founded back in 1886. J&J has for decades been referred to as a widow and orphan stock because its defensive income-generating characteristics make investors feel like they can buy shares almost as an insurance policy to ensure their family's wealth for many years to come. J&J typically finds itself among the 20 or so largest stocks on Wall Street. That's also because of the general resilience of the healthcare sector, which enjoys reliable sales regardless of macroeconomic pressures or consumer sentiment. After all, regardless of what the economy's doing, people still have to buy medicine. 2. AT&T. AT&T is the #1 carrier in the U.S. as measured by wireless subscriptions with about 45% of the market at present. But it's not just one of the biggest telecommunications companies in the world. It's also one of the most generous dividend payers on Wall Street right now, with a yield that's more than 5 times greater than the S&P 500 right now. That high yield is despite a recent dividend cut. Unlike J&J, which is keeping its dividend intact after its spinoff, AT&T announced a cut alongside its spinoff of Warner Bros. Discovery, WBD, last year. 3. Microsoft. When it comes to a stock with scale and staying power, tech giant Microsoft, MSFT, immediately springs to mind. The technology giant is synonymous with workplace productivity, with its Windows and Office 365 software products, the gold standard for businesses around the world. Microsoft isn't without growth plans despite its already impressive scale, however. Its Azure cloud computing business continues to gather steam. Its remote workplace tools, like Teams, have now become hardwired into enterprise operations in the wake of the pandemic. And its Xbox video game arm is a juggernaut in its own right. With long-term investing, it's all about trying to find certainty in an uncertain world. And the dominance of Microsoft seems incredibly likely regardless of geopolitics, economic cycles, or anything else. 4. United Parcel Service. Cyclical businesses, companies that are heavily tied to the ups and downs of economic activity, are more difficult stocks to hold for the long term because of the inevitable swings. But even though United Parcel Service, UPS, certainly qualifies, it's still an excellent buy and hold candidate. Yes, UPS's logistics business is cyclical, as package volume tends to rise and fall based on broader spending trends. But there's a long-term megatrend lifting this stock that cannot be overlooked. And if you look around the front porches in your neighborhood, you'll probably find proof of this trend yourself via all the boxes lying around. In the age of Amazon.com, AMZN, and e-commerce, UPS is about as safe a bet as you can make. It's a valuable part of the global supply chain, and it comes in at triple the size of competitor FedEx, FDX. 5. Prologis. That simple truth makes Prologis, PLD, a great long-term stock to consider because of its portfolio of specialized properties in key markets around the world. The global leader in logistics real estate with a focus on high-barrier, high-growth markets, PLD and its warehouses are a key part of the world's supply chain. Prologis owns and operates 1.2 billion square feet across 19 different countries. Top clients include Amazon and FedEx, making these properties must-have hubs for distribution. But they're just part of a diverse base of roughly 6,600 customers, largely in business-to-business distribution and retail fulfillment. 6. Dominion Energy. For starters, utility companies always have wide moats, which is a way of saying they have significant, established advantages that make it difficult to compete. Utilities are exceedingly capital-intensive businesses that are highly regulated, and thus competition is very difficult to come by. In fact, in many cases, U.S. utilities are de facto regional monopolies. Furthermore, electricity is a necessity for businesses and consumers that sees strong baseline demand, even in a rough economic environment. That creates a measure of certainty for the sector, regardless of broader uncertainty or economic cycles. If you're looking for long-term investments, then utilities are a natural choice. And in this sector, Dominion Energy, D, stands out as one of the larger and more generous options. 7. Dollar General. Generally speaking, retailers are hard to rely on as buy and hold investments, as they tend to be subject to broader spending trends, as well as changing consumer tastes. It's also worth noting that brick-and-mortar retailers are anything but a sure thing in this age of e-commerce. However, discount retailer Dollar General, DG, is still worth a look as a long-term holding, since its unique model sidesteps most of these concerns. As a nationwide chain that offers everything from cleaning products to packaged food to over-the-counter medicines to pet supplies to holiday items, it is very much in the staples business, and as such, doesn't have to rely on discretionary budgets to connect with customers. 8. Lockheed Martin. For better or for worse, defense giant Lockheed Martin, LMT, seems like one of those companies that will always have a sound financial foundation thanks to its focus on military matters and close relations with the U.S. Department of Defense. Lockheed and its iconic Skunk Works developed many of the Cold War-era jets and missile systems that have become synonymous with modern military might. And more recently, conflicts like the war in Ukraine have sparked an increase in spending on its drone and missile defense operations. 9. Enbridge. It's no easy task to identify energy stocks with staying power in this age of climate change. However, one of the largest and most stable stocks in the space is midstream energy company Enbridge, ENB. Though a mainstay of the oil and gas industry, it's important to point out that Enbridge isn't an explorer drilling for crude. Instead, it's an energy infrastructure company. It operates as a partnership, focused on the capital-intensive nature of building pipelines, terminals, and storage facilities. This business model makes the company less volatile than energy exploration and production firms, or the various other energy stocks that are sensitive to market prices for petroleum products. That lack of volatility cuts both ways, of course. For instance, Enbridge didn't see quite the same run-up as oil explorers did during the run for crude in 2022. 10. BHP Group. Generally speaking, materials stocks don't make the cut for most lists of long-term investments. Like energy stocks, they are cyclical investments that tend to rise and fall based on broad-based economic trends and industrial demand. This is one of the largest materials and mining companies on the planet, a multinational company that operates on every continent and extracts everything from copper to iron ore to gold to coal. BHP is also a leader in so-called green metals, a term that refers to a metal with lowest total carbon emissions over its lifespan. For instance, stainless steel is widely considered one of the most environmentally friendly metals out there because it is 100% recyclable. In fact, more than half of all the stainless steel materials in use today have actually been sourced from scrap materials rather than fresh ore. What do you think about our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.